creating my dividend portfolio in April 2022, I have invested in a number of individual stocks and funds. In today's video, we're going to do a deep dive into my portfolio. We're going to find out which of the positions have been performing the best, and of course, which of the positions have been performing the worst. To do this, I calculated the percentage change of each of the positions, using the cost basis and current market value at time of filming. We'll look at the best ones first. The third best performing stock in my portfolio from inception of the portfolio April 2022 all the way up to today's date, which is the 11th of January. My third best performing stock is Unilever. Unilever is a multinational consumer goods company selling a range of products from personal care, food, beverages, cleaning products and so on. Unilever pay quarterly dividend payments and they currently have a yield of 5.1%. Over the course of the time that I've had my portfolio open, I have bought into Unilever on 3 separate occasions, paying an average price of $39.86, and I'm currently up by 5.1% in this position. So here we have Unilever's stock performance, and I'm just going to put it for a 1-year timeline. And I just want to show you the points that I actually decided to invest into this stock. If you know me and you watch this channel, you'll know that I don't really try and time the market. Like, I like to go for opportunities when they're presented and jump on them somewhat. But equally, I won't not invest because the stock hasn't plummeted in price. So let's just take a look. The first time I invested in this stock was August the 1st, so at this point here, and you can see that obviously since then it has gone up. September the 8th, so this point here at kind of a low point, and then the 13th of October, which I know was quite a good purchase, down here. So all in all, I purchased Unilever shares at a lower price than it's currently at, hence why I'm up by 5.1%. And I think there's a number of reasons as to why Unilever has done very well over the time period that I've had my account open for. And I think one of the reasons is just given the nature of the type of company, the type of stock that it is. Unilever is a consumer goods company. It's quite non-cyclical. People want and need the products that Unilever are offering them, no matter what sort of economic time we're in. Sure, there are cheaper brands out there, but people tend to be quite loyal to this company. And talking about loyal customers, one thing that Unilever can do and do is they are really, really good at increasing their prices to help them deal with inflation. The second best performing stock in my portfolio is BAE Systems. They are a global defense, security and aerospace company, and they provide technology to military, government and commercial customers. They pay dividends twice a year with a current dividend yield coming in at 3.1%. If you want to talk all things investing and stocks, which stocks have been doing well for you, which haven't, your latest investing moves, my latest investing moves, and so on, please feel free to join the Discord, where we've built a community of people that want to talk about this stuff every single day. Check out the Patreon in the link below. I purchased this stock on 2 occasions with an average price of $7.73. And I am up on this position by 6.76%. So taking a look here, the first purchase I made was on the 25th of April. So that is, that was quite a good purchase actually. 25th of April right there. And the second one was on November the 16th. So that hopefully... I kind of got the opportunity here, but I didn't try and necessarily time this bottom because I probably wouldn't have done it very well. So the 16th of November. So you can see purchasing at that price and the price that we looked at back here. It's not gone up crazy amounts, but I am up 6.76%. Obviously, this isn't financial advice and is purely my opinion, but I think one reason why BAE Systems has been doing quite well recently is because of just the nature of what's been happening. With the scare around and the wars taking place, it just naturally leads to the defence sector doing better and, governments and stuff wanting to increase their defences. And also, defence sector, I think, in general, they do quite well during a recession. We're now on to the best performing stock of my portfolio. If you follow with any of my portfolio updates or anything like that, and you know roughly what I have in my portfolio, then pause this video here and leave a guess below. Which company do you think has been performing the best for me from April 2022 all the way up to January the 11th? The correct answer is, of course, Rio Tinto. They are a mining company that extract a range of different materials and metal, including iron ore. And now that's going to be important in a minute. And they operate across 6 different continents. I'm currently up by 18% on this one, which is really, really great given the current situation of the stock market. But my Patreon members will know that I did trim this one back a little bit in order to deploy the capital elsewhere. Rio Tinto pay their dividends twice a year and they have quite a large dividend yield coming in at 7.8%. I bought into this position on 3 separate occasions, paying an average price of $51.96. So you can see this stock has been quite volatile. You can see that on whatever sort of screen, whatever sort of time period you look at. It's going to be volatile. It's one of those types of stocks that will be, given what it actually is. But let's just have a look. So April the 25th is when I first purchased this company. So, oh, look at that. Pretty much at that low point there. So that's the first time. And then it was May the 16th, which you can see it wasn't. Oh, yeah, it was pretty good. May the 16th and then October the 13th. So let's just find October the 13th, which was here. So again, not a bad price. Ideally, you know, if you're going to do this really, really well, you're going to want to be buying here, here, here. But if you're a long-term investor, don't worry about it. Just average into your portfolio. Sometimes you'll be higher, sometimes you'll be lower. But if you're going to be holding for the long term, it doesn't really matter that much. So now the price is all the way up here. Of course, you'll notice that this is the 12th of January and I said I'm filming on the 11th. That's because I'm filming on the morning of the 12th, but the calculations were done on the 11th. So yeah, based on yesterday. We just saw how volatile Rio Tinto can be, and that's because it's a cyclical type of stock. It has seen some short-term success, which has been heavily linked to the movements in commodity prices, specifically iron ore. So now we get to the worst 3 performing stocks in my portfolio. Third worst is National Grid, which transmits and distributes electricity and gas. Their dividend yield is 5.2%, paying twice a year. I'm currently down by 4.42% in this position, paying an average price of $10.76. I've actually entered in on this position on 5 different occasions now. So April the 27th was the first occasion, which was around here. Then May the 16th, which was around here. August the 1st. Why didn't I buy it in June? I don't know. August the 1st around this point here. September the 8th, which was here. And then October the 13th, which was, wow, look at that. God, I'm a great investor. No, I did not manage to just time that perfectly. That was just coincidental. I just invested because I wanted to, saw an opportunity and managed to get that price point right there. But it doesn't matter. That wasn't what I was trying to do. So yeah, you can see that the prices that I paid were quite good prices. Some of them were up here, but most of them were quite low. But this stock hasn't really done very well. And we'll get on to why in a minute. And that has meant that I am down on this position by 4.42%. But we're going to get on to some reasons why I just don't care about what are the biggest winners and the biggest losses in my portfolio. Why I don't care about that in just a minute. I don't really need to say too much as to why National Grid or other energy companies maybe have taken a hit recently. 2022 was just a very dramatic year for the global energy markets. Sparked by the invasion that we saw and the war, commodity prices in general have just been on a little bit of a roller coaster. And given National Grid's central role in the UK's distribution of gas and electricity, it's not a surprise that this company has been hit pretty hard. And given National Grid's central role in the UK's distribution and transmission of electricity and gas, it's not really that surprising that all of the chaos happening has impacted this company over its last sort of 1 year performance. Next up, the second to worst performing stock in my portfolio is Diageo. They are a multinational alcoholic beverages company with a wide range in their portfolio. You have Johnny Walker, Smirnoff, Guinness, lots and lots of these really famous alcoholic brands. On this position, I'm down by a tad more than I am on National Grid at 5.24%. They pay twice a year and their dividend yield isn't crazy high, it sits at 2.2%. I paid an average price of $38.73, purchasing this stock on 3 separate occasions. There is a bit of a theme here on these dates that I'm purchasing these stocks at. It's just because I tend to do my investments once a month, and for whatever reason, it's landed on the same time. So the first time was April the 25th, so around about here. Then May the 16th, which was at this higher point here. Then November the 16th, which was, let's find November the 16th, October, which was around this point here. And you can see over the past 1 year, Diageo just hasn't really done well. It's down by 3.22%. But if you expand that to the 5 years, you'll see that this is just a bit of a volatile time right now. But in general, this stock look at it. It speaks for itself there. When thinking about why this stock may be one of the not so good performers in my portfolio, I think it might just come down to the general increase in cost of living. People may not be able to spend as much on alcohol. Maybe they're looking for cheaper alternatives. Maybe they're not going out to restaurants and pubs so much. And that obviously all impacts this stock. But if I'm missing any other key reason that Diageo has been having a bit of a rocky time, do let me know in the comments below. So that now, of course, leaves us to my worst performing stock in my portfolio. Now, we just saw National Grid down by about 4.4% and Diageo 5 point something percent. I've literally forgot already. But this next one, this is really quite bad in performance compared to the two that we just looked at. And that is Tritax Big Box REIT, ticker symbol BBOX. And this is a real estate investment trust investing in those big warehouses that store products for massive companies. And I am down by 33.37% on this position. They pay their dividends 4 times a year with a dividend yield of 5.1%. Now, I've only purchased this stock on 2 separate occasions with an average price of 2.24. So let's just have a look here. Over the past 1 year, they're down by 35%. 5 years, they're up. And if we max it out, we can see the really dramatic drop here. So let's just put it back to 1 year. I first bought into this company on April the 25th, so around this point here before it started dipping down. And then May the 16th, which was around this time here where it wasn't doing too well. But even though, I got a good price, you could say on May the 16th, it's carried on decreasing, hence why I'm down by over 33%. I think with Tritax and other companies like it, they saw a massive increase in their business, of course, when the internet shopping boom sort of happened. I think it was called like the warehouse bubble or something like that. But now I think with the current cost of living going up, inflation rates, all of this stuff, I think people are naturally just being a little bit tighter with their money. And maybe they're not purchasing online as much, maybe they're shopping local or just not doing as much shopping at all. And just with the type of business that Tritax is, it's very much relying on the companies that it's serving doing very well. Like Amazon, for example. If Amazon isn't fulfilling loads of orders and needing these warehouses as much, of course it's not going to do as well either. But that's just my 2 cents. Of course, let me know what you think. So we just looked at my best performing and my worst performing stocks. But I should say now, I don't really care what my best performing stocks are, and I don't really care what my worst performing stocks are. I keep an eye on it, of course, but to be honest, as long as the company doesn't change in its fundamentals and what the company is about at its core, I don't really mind all this short-term fluctuation because I've picked these companies for a reason. I wanted them in my portfolio. I thought they were good quality companies. And if that changes, then yeah, I'll probably care and I'll probably sell out of the position. But if that doesn't change, then I just view this as short-term market fluctuations, a little bit of volatility here and there. And of course, once you zoom out and you look at the big picture, you don't really notice this short-term volatility. And I'm in it for the long term. And I think it's that long-term mindset that means people, they don't look at the price movements every day. I tend to look at the price movements every day, but that's just because I'm interested. I'm looking for maybe a next opportunity. I'm looking purely just because I care about the markets. I'm not looking with the mindset that if I see something drop, I'm going to panic. And like I just hinted at, if you think it's a good quality company, then you'll probably believe that it's going to go up again in the future. So just hold on tight. I hope you enjoyed this video. Thank you so much for watching, and I'll see you in the next one.